China's loss in Trump's trade wars, Asean's gain. Look at Vietnam. The country is setting an example to the rest of Southeast Asia when it comes to attracting industry. President Donald Trump is a game changer, and in so many ways. While Southeast Asia rarely features on his agenda, the Trump-initiated trade war could well end up resetting global manufacturing and the all-important supply chains as exporters seek to lessen their exposure to China. For the three giants of Asean, Association of Southeast Asian Nations, with populations of over 90 million, Indonesia, the Philippines and Vietnam, this could be a major opportunity. Essentially, each of the three is vying to attract industrial investment and the attendant employment. To date, Vietnam has been the most successful. Indeed, Samsung, the world's largest smartphone manufacturer, has invested over $7 billion in Vietnam, contributing close to a quarter of Vietnam's total exports of $14 billion in 2017 alone. Its two manufacturing plants, Bac Ninh and Tay Nghien, located outside the capital of Hanoi, look like sprawling mini-cities as they spread across the Red River Plain. And the facilities are huge, employing more than 149,000 people. So, as the prospect of a major wave of industrial relocations from an increasingly expensive China becomes a reality, which of the three countries stands to benefit the most? Sadly, the Philippines, with its clapped-out infrastructure, expensive energy, and notorious bureaucracy, remains the outlier. Vietnam leads the pack. For example, in 2017 alone, Vietnam attracted us $5.88 billion in foreign direct investment, whilst Indonesia, with nearly 3 times the population, trailed behind, attracting only us $2.34 billion. To my mind, there are 4 key issues determining national competitiveness. The first is education. All three countries have millions of young workers. The challenge is matching the workforce to industry requirements. Whilst Indonesia and Vietnam both produce well over 100,000 engineers every year, their suitability for employment is often questionable. There is also a looming shortage of engineers expected in the next 2 to 5 years. According to the Institution of Engineers Indonesia, the industry will be short of 280,000 engineers by 2023. Vietnam Works, a leading online recruitment agency, forecasts a lack of 500,000 engineers in 2020. Certainly, there needs to be greater emphasis on vocational training and placement based on the specific needs of industry. The second issue is nationalism. This barrier to business is generally rhetorical and much used by elite players with entrenched interests to shut out competition. Intriguingly, in Indonesia, more than 350 businesses in 16 industries are on the government's negative or proscribed list. By way of comparison, Vietnam's communist government has limited the negative investment list to just 14 strategic sectors, which include broadcasting, import/export, airports, and telecommunications. Whatever the case, governments need to be clear as to why certain sectors are excluded from foreign participation. Is it a question of national security, defense industries, or preserving specific high-employment sectors, agriculture, and food processing? The third issue is democracy. Contrary to what liberal Western media argue, most investors could not give a damn about democracy and human rights. Why else would hordes of American corporations have piled into the People's Republic of China over the past few decades? It is important to distinguish between the principles of democracy and the issue of legal certainty. Multinational corporations, MNCs, are more comfortable operating in markets that respect the sanctity of contracts and have relatively incorruptible legal systems, such as Singapore. The inverse is true when it comes to the countless administrative regulations that torment MNC managers in countries such as Philippines and Indonesia. Needless to say, their eradication could make a significant difference to business expansion. The fourth issue is more nebulous, namely the question of national character and history. The Vietnamese endured more than 30 years of war, taking on a succession of aggressors from the French to the Americans and the Chinese. Economic reforms, dubbed Boi Moi, were only introduced in 1986, after which the country grew dramatically from a GDP of $6.65 billion in 1987 to $23.8 billion in 2017. Clearly, the past few decades have been a period of catching up as a younger generation enjoys the fruits of a more overtly capitalist economic system. The same cannot be said of Indonesia and the Philippines, where decades of so-called trickle-down economics have left many millions still poor and marginalized. Almost 26 million Indonesians alone live below the poverty line. Not to mention the deep suspicions of the Washington Consensus set of economic policy prescriptions that appears to offer so much whilst delivering so little. So as Trump continues to rail against China, Southeast Asia's giants have to make tough decisions to make themselves attractive for foreign investment. If not, this historic opportunity will be wasted and millions of manufacturing jobs will be lost to the region. Trade war ripples are expected throughout Southeast Asia. Alan Ballard, executive director of the Asia-Pacific Economic Cooperation Secretariat, said the trade friction between Washington and Beijing is looking worryingly bilateral. Victor Chu, chairman and CEO of First Eastern Investment Group, said that many manufacturers in Southeast Asia could actually see benefits from the trade war in the medium or long term. As trade tensions continue to be a concern for the global economy, Ballard said it is essential for the next tier of economies and countries to step up and take leadership. Hanoi, Vietnam business and political leaders from throughout Asia gathered this week to meet in Hanoi for the annual World Economic Forum on the Association of Southeast Asian Nations. As the world's two largest economies continue to wage an escalating tariff war, global trade was one of the primary topics on the agenda. At the CNBC session, during the conference that was developed in partnership with the World Economic Forum, Alan Ballard, executive director of the Asia-Pacific Economic Cooperation Secretariat, said the trade friction between Washington and Beijing is looking worryingly bilateral. There are some big currents around this region coming from there, he added. For one, Hong Kong is grappling with the difficult trading climate, given the country's role as a bridge into and out of China, according to Victor Chu, chairman and CEO of First Eastern Investment Group. He said there will be serious repercussions if the trade war is going to be more than a short-term phenomenon. Chu mentioned that Hong Kong is looking at closer relationships with Japan and Asean while contributing to China. In fact, the city signed a trade agreement with Asean last November. Supply chains. If major economies don't resolve their trade disputes and instead descend into a long-term tit-for-tat trade conflict, then global supply chains would likely see significant disruption, experts have predicted. Chu said that a lot of the manufacturers here produce intermediate products for final assembly in China, and he suggested that Southeast Asian manufacturers could actually see benefits from the trade war in the medium or long term. In the short term, however, it is actually quite difficult to replace China's supply chain, he said. Furthermore, the trade disputes could breathe fresh impetus into alternative regional trade deals like the Regional Comprehensive Economic Partnership. Ignatius Darrell Liking, Malaysia's Minister of International Trade and Industry, said Asean should start thinking about consolidating together once more. He added that the region needs to start taking opportunities by creating an economy through Asean to cushion all the effects of the uncertain American-Chinese trade war. As trade tensions continue to be a concern for the global economy, Ballard said it is essential for the next tier of economies and countries to step up and take leadership. Malaysian official, we should try to take advantage of the US-China trade war while it can. Malaysia should take advantage of the opportunities arising from escalating trade tensions between the U.S. and China, the Malaysian Finance Minister Lim Guandang told CNBC on Thursday. The country's problem is with manufacturing capacity, as it is struggling to ramp up production in the shortest possible time, he said. Malaysia should take advantage of the opportunities arising from escalating trade tensions between the U.S. and China, Malaysian Finance Minister Lim Guandang told CNBC on Thursday. The Malaysian economy has been influenced by the ongoing trade war between Washington and Beijing, he said, but that could actually be positive for the country in the short run, despite the outlook appearing a bit uncertain, Lim said. There have been many inquiries from those who wish to be in the right position if the trade war escalates, he said. Our problem at the moment, with our manufacturing industries, is a problem of capacity, whether we can ramp up capacity in the shortest possible time, Lim said. There's a lot of inquiries, not only from China, but also from United States. We should try to take advantage whilst we can, he added. But he acknowledged that in the long term, we hope the trade war would fizzle out because it's not good for the global economy, and what's not good for the global economy is not good for Malaysia in the long term. Lim said he supported global trade, especially if it is fair. New government's priorities. Malaysia's new government under Prime Minister Mahathir Mohamad has said it was saddled with a debt of about 1 trillion ringgit, more than $241 billion from the previous administration. The country is also recovering from a multi-billion-dollar financial scandal surrounding state investment vehicle One Malaysia Development Berhad. We have to go through the legal process, and due process takes a long time, but we are getting there, Lim said, commenting on the current progress of recovering the missing funds from 1MDB. Another focus of the new administration has been to re-examine international deals struck by the previous government, with Mahathir traveling to China in August to renegotiate some of the deals backed by Beijing. Emphasizing that Malaysia is supportive of China's Belt and Road Initiative, a continent-spanning investment program meant to increase Beijing's economic and geopolitical clout, Lim said his country wants a fair deal. We do not want any unfair contracts, and we feel that some of these contracts entered into by the previous regime unfair to the country, and not in our national interest, he said. Beyond China, Lim said, Malaysia has been in close contact with other countries such as Japan and the U.S., stressing the need for his nation to build mutually beneficial relations. We do not want to enter into any deals or any contracts that would cost us to be in heavy debt. We do not want to cede or give up our sovereignty just because we are unable to pay off these debts, he added. We are supportive of global trade, especially if it is fair trade, Lim said. If it's not fair trade, then why should we be part of the deal? Lim himself is no stranger to controversy. He was recently acquitted of corruption charges from a 2016 case involving the purchase of a bungalow in Penang State, where he formerly served as chief minister. He had pleaded not guilty to both charges, saying they were politically motivated.